If you own Section 8 rentals or are thinking of buying one, then this video might be the most important one you watch all year. Because right now, something big is happening behind the scenes and it is making landlords panic. Government shutdowns, housing authorities falling behind on their payments, new federal legislation changing the rules. It's all happening at the same time. But while some people are panicking, I'm using this time to build my portfolio even faster. So in this video, I'm going to be breaking down exactly what is happening to Section 8 right now, what it means for your cash flow, and what I'm doing right now to scale my $1.9 million portfolio even higher. So that way, I'm not going to just survive from this reset, I'm going to profit from it. Let's go. First up is the government shutdown drama. You've probably seen those headlines already saying, oh, Section 8 is doomed, Section 8 payments might stop, or that landlords are going to lose their homes. And yes, the government shutdown is real, right? That much is obvious. But here's what you actually need to know about how it affects Section 8. HUD has already funded most housing authorities all the way through October, and some are even paid already up to mid-November. So no, the tap is not just like turning off tomorrow. A lot of it is kind of fear-mongering right now. But the catch is, if the shutdown continues going on and Congress does not pass new funding, then yes, payments might slow down, be delayed, or stop at the moment. But personally, I don't even think this is an issue because the longest government shutdown was just a little over 30 days. So honestly, I am not really worried at all, at least in regards to the federal shutdown. But what should you do just in case? For now, I'm building up at least 2 months of reserves per property. So that way, if the delays continue, the government shutdown longer, etc., my housing authority goes kaput, then at least I'll have a few months of backup in order to pay the insurances, the mortgage, the taxes, and everything else is honestly covered by the tenant. But again, I doubt I will actually use these reserves. I'm also keeping tight with my contacts at the housing authority. So that way I know when their cash is about to run out. I know that if they have heard any news from the government themselves, because however the housing authority is handling the situation and how they're funded is going to affect every single landlord that is connected to that zip code. This is a stress test for everybody. If you've got no reserves and you're just banking on the next HUD deposit to pay your mortgage, I'm sorry, but you're gambling. You probably shouldn't be in this business if you're always one mortgage payment away from being bankrupt. Oh, and I forgot to mention, if you guys are worried about, for example, something like maintenance, I highly recommend a seller-paid home warranty when you're buying the property. And then just do the math on if you think the home warranty is worth it moving forward. So that way your maintenance costs also go down. By the way, if you want to ask me and my cat these questions live, go ahead and click the first link in the description because it's access to my free school community where I have over 1,200 different investors. So go there, ask questions, join our weekly calls, and that way you can learn exactly what you need to get successful in Section 8, while also connecting with other investors doing the exact same thing as you. First link in the description, go join. All right, let's get back into the video. Second big issue. What happens if the housing authority stops paying? In Milwaukee, the housing authority has already fallen behind on Section 8 payments for over 500 rentals. So the landlords are stuck. I mean, they might be getting the tenant portion of the rent, but it's usually only 20, maybe 30% of the total. The government isn't paying the rent and people need real answers. And a lot of people are saying that this is the worst delinquency that's ever existed in the history of the Section 8 program. And it's not just Milwaukee in this specific scenario. A lot of these underfunded and smaller housing authorities are experiencing the exact same thing. So let me ask you, what do you do when your tenant pays their share but the government doesn't? That's literally the nightmare that some landlords are living right now. And that is why I keep everything documented. I keep invoices documented, emails documented, approval letters, inspection results, everything. So if payments do get delayed, which they haven't for me yet, I will be covered. But on top of that, moving forward, I'm just spreading out my risk. You don't want all your units relying on a single housing authority. If they drop the ball, then your entire portfolio suddenly goes dark. So I'm currently investing in spread out cities with different public housing authorities. And even if it's not spread out cities, each city has multiple housing authorities that handle different zip codes. So if one goes down, I will still be good. But people don't realize there's an easy way to prevent this from the beginning. Before you buy the property, just call the housing authorities. Do you know why none of my properties have been affected? Because I Googled the housing authorities' phone numbers beforehand, went on their contact pages, called them up, and asked what their processing times were, what their inspection times were, if they were having funding issues, if they were having voucher issues. And then when I finally got in contact with someone who knew what they were talking about, guess what I did? I took down their information and they became my future point of contact. A housing authority that is already struggling are going to be the ones to fall behind. The ones that are currently going strong are the ones that might have, a small hiccup, maybe some slight processing delays, and that's about it. For example, Birmingham, Alabama has always been a fairly strong housing authority. And I recently called them and they said that their processing times have upped just a little bit to about 30 days, which I'm honestly fine with. Section 8 tenants tend to stay for an average of 6 years. So I'm okay with a little hiccup in the beginning, which honestly, I'm probably gonna use to rehab the property anyways, in return for 6 years of bliss. Now let's talk about the big one, the Road Act, which directly influences the future of Section 8. Congress recently passed the Road to Housing Act, and it has a lot of investors really nervous. But inside of this bill, this is the part that not a lot of people are talking about for some reason. There is actually a pro for Section 8 landlords. A pro if you are tired of inspection delays. It is called the Choice in Affordable Housing Act. And here's what it does. If a property was already inspected under a different federal program, like USDA loans, tax credits, VA financing, then it automatically counts as Section 8 approved as long as that previous inspection was done within the last year, which that is huge because one of the biggest issues that a lot of new landlords face is these initial inspection delays and the yearly inspection delays afterwards. Now, the yearly inspection afterwards isn't that big of a problem. However, the initial one has cost a lot of new investors thousands of dollars, including myself. But now this new rule could literally mean instant approval on properties that were already checked by a different agency. For example, the homes that specifically veterans use. So here's what I'm doing with this. When I'm analyzing and looking for new homes, I'm asking one question. Has this property already passed a different federal inspection the past year? If yes, then that's a green flag. That means you might be able to just fast track this and get approval instantly. But there is another side to the Road Act that I'm going to talk about. We are seeing more scrutiny, we're seeing more enforcement, and more focus on doing things right and being compliant. So there's, talk of work requirements, time limits for tenants, and reduced HUD funding in the future. Those are all scary. However, they are all proposals, so I can't confidently say that they're even going to happen. But I am treating this like a wake-up call. A lot of these gurus that you see on social media that are into Section 8 are doing these side deals where they're renting out ceiling fans for 20 bucks a month. And in general, just keeping these properties super slummy. Well, hopefully they will be ineligible for the program. And honestly, I fully support that because I don't want scummy landlords to be entering a program where we're supposed to be giving tenants a safe, affordable, and quality place to live. These are human beings after all. So I think of that as the trade-off. For getting 20% higher market rents and guaranteed government-backed rental payments, you as a landlord have to keep the unit in good condition and honestly, just treat the property well. I'm also getting my leases cleaned up, my inspection files organized, and my business structured for compliance, not pure profit. When the rules change, the people who stay ready always win. This is the reset moment. And like with any reset in life, there is a group of people that will be left behind and a group of people who will adapt. I'm adapting, I'm still buying, and I'm scaling my portfolio even more aggressively in 2026. If you want to know exactly how my portfolio got to be from 0 to 1.9 million, watch this video on the screen now, so that way you know exactly how I got to where I am today and how you can copy the exact strategy to build a portfolio yourself, even with little money or with all of these HUD changes happening. The video's on screen now, go watch it, and as always, I'm Joseph Khateri. Have a nice day.